Good morning, everyone, and thank you very much for joining. I just want to do a sound check and just make sure that you guys can see the slides. Apologies, I'm using only one monitor and a hotspot, just we've got some power issues. Can you guys just confirm that you are seeing my... Okay. Hey, Raymond, nice to have you on the webinar. Thank you for joining. Hi, guys. Okay, excellent. All right, this is the DAX Open. My name is Russell Shaw. I'm the Senior Market Specialist at FXCM. My email address, r@fxcm.com. Today is Friday, and it's the 4th of February 2022. I just want to put I want to put the link in the chat for today's non-farm payroll. So if anybody hasn't registered and you'd like to participate, the registration link is in the chat, so just go ahead and register and you should be good to go. I'm going to just bring up the high risk investment warning. We had our 2022 outlook yesterday. I think it went really well. The morning session was a little smoother. Again, technical issues my side. That's on our Insights webpage. I'll put that onto the Telegram as well, so you can expect to see that on the Telegram, which I know I've been neglecting as of late. All right, excellent. Let's just bring up the commentaries disclaimer here. And just finally the references. So we'll just look at Market Scope 2.0, but before we do that, I'm going to go through the CNBC morning note, because a lot's happened over the last 24 hours, so we should just make sure we're on top of the news. Excuse me. Semiconductor companies around the world are preparing to make major investments in their research and development facilities in an effort to meet growing demand as the global chip shortages rage on. So that's the first paragraph. I beg your pardon. I actually want to go back to the headline. I always think the headline is important to read. So the headline says, chip giants are ramping up spending by the billions as semiconductor demand booms. And now that I'm looking at that, it's not. Yeah, I beg. It's not the right. It's not the right CNBC news article. Nevertheless, that was an interesting headline. The morning headline reads, Europe market set for higher open after BOE and ECB policy updates. Europe markets are set to open slightly higher as investors digest key policy updates from both the Bank of England and the European Central Bank. Thursday saw the European Central Bank keep interest rates unchanged in spite of record inflation levels across the Eurozone. The Bank of England, however, hiked rates, and these were the first back-to-back interest rate hike since 2004. Elsewhere, stocks in Asia Pacific were trading higher on Friday, and this was after Wall Street suffered heavy losses on Thursday. So why were there heavy losses on Thursday? And I think that Facebook or Meta platform really spooked the market because its results weren't particularly good. And we actually saw a gap down in the DAX as well. And I would suggest, although there was market participants looking at the ECB, I think the Meta results really kind of spooked the market. But in the same breath, we can say Amazon shares are soaring as cloud revenues beat and profit gains from the Rivian stake. So I think it's going to be an interesting day on the market, and we'll see if we can make some sort of sense of it. All right, so with that said and done, let me bring up my my charts. And it's so much more difficult to do this with one monitor. All right, let me just bring it this way. So what we have here is the DAX Daily, Now you can see yesterday's price action. We're going to look at the weekly in a moment, but yesterday's price action I don't think is encouraging. It actually makes me quite nervous, and something that we need to keep an eye on, because this is Wednesday. Okay, so we're looking at the daily here, not the weekly. We're going to go to the weekly. So I'm just working from sort of bottom up at the moment. Here's Wednesday. Now take a look. Wednesday gives us the highest high, doesn't it? And then yesterday, a gap down on open, But look how it was a huge sell down on the market, and it's put us into the bear zone. It's put us into zone 3, which is the lower blue, lower red. So I don't like that price action at all. And if we just zoom out, this is what I think we need to watch. Whether this is what's going to materialize, I don't know, but I'm just going to draw in our 1, 2. I think you guys can see where this is going, right? 1, 2, 2, 3. Okay, there's the 2, 3. Now here, well, are we in the middle of the next leg? And if we are, well, then that leg is down, isn't it? So I'll put in a question mark here. Now, when we take a look at the weekly, because we'll come back to the daily in a moment, it shows you there was a really good end to the week last week. There's been no follow through this week. And that's a concern. So we go now to the weekly chart, and here you can see that I drew this aqua horizontal when price was above it. We had 2 out of 3 conditions. Let's just understand those conditions, because they really, in my opinion, one of the best ways to monitor a market. They're called, if you learn short-term bar analysis, they're called pivot point reversals. We call them reference candle reversals. They're one and the same. It's just with the reference candles, we're looking at 3 points, which I think makes it much easier to identify. So you've got condition 1, okay, which is the lowest low in at least 3 candles. So the candle to the left of it has the higher low, the candle to the right of it has the higher low. So that's condition 1. Condition 2 is price moving above that reference candle. But condition 3 is everything. Without condition 3, we've got nothing. 2 out of 3 equals 0 in this case. So what's condition 3? Condition 3 is price closing above the reference candle's high. And that has disappeared effectively. We've got a bearish looking candle. And unless there is remarkable price action today that really takes us back above the high, well, then we're going to actually be stricter next week. What we're going to do is we're going to move our line in the sand higher, and we're going to say, well, you know, bulls, you had your chance this week, you didn't capitalize. Well, now you need to prove yourselves by taking out even a higher level. So that's kind of the way we're going to be looking at it. Now, the other way I think that it's worth taking a look at, just in terms of the last 2 weeks here, what we're going to do is we're going to combine the last 2 weeks, and I think that makes for fascinating analysis in itself, because it gives us a very good idea of the sentiment that is present in the market. So what we do when we combine 2 candles, we take the highest level out of the 2, which is going to be this week's high, and we're going to take the lowest level from the 2, which is last week's low. So what we'll do is we're just going to go like that. So we're representing the range of 2 candles in one candle effectively. Then we're going to take the open. Well, the open would be from last week, okay, because that's the open for the 2-week period. And you can see where we opened around about there, didn't we? Okay, so we just put a little tick mark there. And where are we closing? So for the close, we've got to look at this week. So this week, price is over there. Now, this is still an active candle, so we don't quite have the correct close yet. We'll have the correct close at the end of trade today. What kind of a candle is this? Let's make this a Japanese candle. I think most of us are familiar with the Japanese candles, and it would look something like this, wouldn't it? So what's that candle? So this is a long-legged spinning top, let's call it that. But besides the sort of fancy names, we want to understand the sentiment here. So the sentiment is, well, bears tried desperately to sell the DAX down last week. They lost control at the low. Bulls took over and they tried desperately to get price back up, but they lost control at the high. Where are we now? We flat. Over the last 2 weeks, we're relatively flat with perhaps a slight downwards bias in terms of the real body. But I don't think that's I don't think that's the important part of the candle. The important part of the candle is, and this has been something we have mentioned constantly since January, and that is uncertainty. And we're just not getting away from it. We tried, or the bulls tried to use the 15,000 as their platform, and we almost had that bullish follow through. And you know, that bullish follow through to me would have done a lot to ameliorate a lot of the uncertainty. We would still be in an uncertain environment, but the fact of the matter is, I think a bullish reference candle here would have done a lot. In terms of my own personal market psychology, I don't have that luxury now, and I'm still very much stuck in this environment, which is characterized or defined, let's say, by uncertainty. Now, the big deal about uncertainty, and I want to stress this, retail traders must understand uncertainty is huge. Now, the reason I say this is because when I first started out, I had no idea how dangerous uncertainty could be. But uncertainty is what is the definition of risk. That is the definition of risk in financial markets. When there is heightened uncertainty, that means there's heightened risk. That is the current environment we're in. How do I know that? Well, we've combined these two candlesticks. Right now, as you and I have this discussion, we're sitting in an uncertain environment. Now, because there's heightened risk, well, that means there is also the prospect of heightened reward, because that's the relationship. If there's risk, there is an associated reward. If there's no risk, there cannot be a reward. Okay, so risk is good in the sense that it gives us the opportunity, but heightened risk, okay, which of course means heightened reward, must not be underestimated. The risk-reward paradigm, and again, I've said this many times. I'm sure you guys have heard it, but it's an asymmetrical relationship. Risk is far worse than reward. It's far worse than reward mathematically. A 10% loss, and so we take $100, we take 10% of that, we're sitting at 90. We make 10% back on our 90, we're only at 99. We're still a buck short of breaking even. Similarly, think about it, if we were at $100, we made 10%, so now we're sitting at 110. We lose 10%, well, we lose $11, right? So we're back at that 99. We're a buck short. You're always at a disadvantage with risk over reward. More than that is that on a trading psychological level, and again, it's not. I'm not a psychologist, but it is an area that I try and read up on, because I know that mass trading psychology constantly needs work. But we tend to put more meaning on losses than rewards. In other words, if we win in a trade, and we gain $10, we don't. It doesn't make that much of a difference to us. But if we lose $10, we just can't stand it. There's just a much more meaning. Generally, I'm sure not all traders are afflicted by this, but generally as traders, we are much more cognizant of the losses we incur than the gains that we earn. So there's this huge asymmetry between risk and reward, and consciously we focus on the reward, unconsciously we're focusing on the risk. We've got to bring that risk to the conscious part. Okay, this is what we've got to focus on. When portfolio managers are building a portfolio, they're not looking at reward. Okay, they're looking at risk. If they can control the risk, they're doing an extremely good job. If they're focusing only on reward, they're doing an extremely poor job. So this is where the focus of portfolio managers are. And given that we're in this uncertain environment, I want us to focus on this uncertainty, on this risk. What does that mean for us as traders? It means different things to us, because we all again have different risk tolerances. If you've got a low risk tolerance, then maybe you need to just sit out and wait for more certainty to present itself. If you've got a high risk tolerance, fair enough, then you are accepting that you're a risk taker, but you cannot accept risk without safety. And safety means risk management, and it means stop losses. And these are key parts of your trades that need to be truly considered, because the environment is that uncertain. Let me just check if there's any comments here, because I'm only on the one monitor. No, we're all good. Okay, so you can see the weekly environment is uncertain. Moreover, we flat. We're moving in a range. It's always difficult to trade a rangey market. Well, we're in the middle of the range here. We're right in no man's land. So that just adds to that theme of uncertainty. So just be aware of that. But the daily bias, well, that's where we've got to be careful, right? Because we've now moved into zone 3, and zone 3 is a weak area. And as we mentioned here, we've now got the reference reversal locked in here. Okay, we've got that locked in. Now, that's why we started with this. The reference reversal is a very, very powerful chart pattern in my estimate. And the reason for that is because they have to be present at swings. They have to be. If you show me a swing, I'll show you a reference candle reversal. The swing is, of course, the swing may be a shallow swing or a deep swing. For example, here is a reference reversal to the upside. Here's the lowest low. When we take out this candle, we've got the reference candle, maybe a little bit of points, but no real swing there. Okay, and that's the difficulty. Okay, so I'm not sure I've explained this well. Just let me do it this way. Think about this as a bullish reference candle. We need that close to be above. Now, the bullish reference candle, which is this guy here, that locked in, but there was no swing. There was no real swing to the upside. And that's the danger. The three conditions don't mean there is going to be a swing. Okay, they don't mean there is going to be a swing, but there cannot be a swing without them. Okay, so now we go to today's reference candle reversal. And I don't know if there's going to be a swing off here. Nobody knows if there's going to be a swing off here because nobody's got a crystal ball. But if there is going to be a swing, well, the three conditions are not now locked in. The platform's set for weakness. It's just it may not happen. So the probabilities, the odds, if you go to a bookie, you get your odds. The odds are, in my opinion, have improved for downside swing because of these three conditions that have locked in. If you take a look at the candlestick right now, the uncertainty here is to be seen, it's very early in the morning, in the trading day, but you can see we've got again a doji. Bulls try to take price up, bears try to take price down. We flat. Nobody is really sure what to do in the market at the moment. So this weakness here at the moment is something that we need to consider. How would this weakness end? Well, let's just put in a contra. So then you'll take a look at the lowest low, which would be yesterday's candle. And as long as that stays as the lowest low, that means there's no further swing, there's no weakness downwards because this remains the lowest low. Well, if that's the case, and if we can get a movement above this reference candle, well, that's bullish. That's bullish. We can get rid of that, and we can start looking for a swing like this. See, and that makes a world of difference. So instead of looking for a 2-3 correction to the downside, sorry, I didn't need to do that. We're looking for a 2-3 correction to the upside. Where what's going on here? Let me just go. There we go. Sorry about that. All right. All right, so you can see that those are kind of the potential scenarios. Let's just go down to the hourly. We haven't looked at the hourly here, and the hourly, I think we're at this weird R1 central pivot. Look how close this R1 central pivot is. It's quite difficult just to get a any sort of trendiness because they're very close together. Because of the movement of the daily chart, what I am worried about is that we would get a bearish cross to the downside. If we get a bearish cross to the downside, well, then that's got to be accompanied by a bearish cross to the by the stochastic, and if that happens and we start moving towards this lower quintile here, then of course we get the that continuation of the downswing on the daily. So just keep an eye open for that. Just remember to be very cognizant of the risk reward profile in the market at the moment. Any comments or questions, please go ahead and type those through. Any comments or questions, please go ahead and type those through. Did you guys hear me okay? Can you just confirm I was the sort of okay, good. All right, excellent. All right, let's end off here, and then we will have the NFP live trade later. I'm confident the power will be back on then. All right, guys. Thank you very much for joining me this morning, and speak to you guys a bit later in the day. Thanks, guys.